All right, well, here is our next segment. So I'm going to share my screen again. This is our Financial 15 segment. So this is, if you're just joining us for this portion of this webinar, this is the last 15 minutes or so of our weekly webinar. In the first 15 minutes or so, we talk about updates from the Ed Slack group. And then we move into our market updates, and we talked about what the markets did last week and some analyst reports about what we think might be causing the response in the market over the past week and what to look out for going forward. And let me just say, I'll just say again, from the investment point of view, I spent a lot of time on investments last week. If you want to go back and look at that video from last week. And as a reminder, folks, we have this longer format of the weekly webinar, which can run 45 minutes to an hour. And then we also have the Financial 15, which is the last 15 minutes or so of the broadcast. But we break that down also in playlists. And if it's longer, then if we get close to 15 minutes, we'll leave that usually intact. Sometimes we'll break it down to a couple 7.5s if we can find a good place. But we want to break these up into easily listenable, if that's a word, segment, so you can understand it, because Financial 15 is not always 15 minutes, if I'm being honest. But if you're just joining us for the Financial 15, make sure that you hit the subscribe, like, and notification button, and you might want to go back and listen to the weekly webinar. So let's talk about year-end planning. And the first item I have on here is, why is it important? I don't know why it has a blue line surrounding it, but now it's gone. So why is it important? And I get most of my webinar ideas from you folks, clients who I'm talking to, or people who write in with questions. And we're going through our financial year-end planning. So we started sending out emails in early September with this year-end planning document that I'm going to share with you, that asks just some really simple questions. And I had someone ask me, well, why is this important? So I explained that. I explained that to this person, why it's important to do this year-end planning. And I want to thank them. I said, okay, well, now the good news is that not only do you know why this is so important, but you've also given me a great webinar topic. So I thought this was a really good time. Here it is, November 7th. To talk about year-end planning and why is it important. So I just wrote this down. It identifies actions you may want or need to take before the close of the year. Really simple. Why is this important? Because once the calendar turns from December 31st to January 1st, there are many things you can't go back and do. There are some things that you can do for prior years, and we're going to talk about that, or the prior year. But there are many, many, many things you can't undo or do that maybe you could have done if you would have taken a look at it. Back to those critical items. There are critical items in your retirement plan that maybe if you knew myths and misconceptions on these critical items, that maybe if you would have known in the past, you would have done things differently. But we have these windows of opportunity to do things now. And this is just like the year-end planning is the same thing. If you're not paying attention to these things, or if nobody's bringing it to your attention, if you don't work with Attleboro Wealth Management, is your current financial advisor sending you a year-end planning document? Are they talking to you about things to do at the year? I hope they are. If not, you should probably be having a conversation with somebody else. But these are critical items that you may look back on in early 2024 or late into sometime in 2024 and say, darn, if I just would have thought about that, maybe I would have done things differently and they would have had a big impact. So why is it important? It identifies actions you may want or need to take before the close of the tax year. And the close of the tax year, folks, it's technically December 31st, close of the year, of course. But there's so much, there's so many things that need to be done before that you just may not be able to get done by December 31st if you wait until the end. We're going to talk about Roth conversions here. Our deadline for Roth conversions in our office here is December 15th. Because by December 15th, we're confident that we can get a response from the custodians and that those conversions are going to get done. After that, everybody says it's best efforts. They might say, your Vanguard, your Fidelity, your Charles Schwab might say, oh, we can do Roth conversions right up to the deadline, 12/31 if it's a business day. Don't trust that. Don't count on that. what if something happens? What if you need an initial, a signature? What if there's something that just doesn't get it done? Okay, so why is it important to identify actions you may want or need to take before the close of the year? Information to review. So what do you want to review? I wrote here capital gains and losses. So information to review, capital gains and losses. So what are capital gains and losses? In your investment accounts that are non-IRA accounts, so not Roth IRAs, traditional IRAs, or retirement plans, we're talking about anything. Remember our buckets, right? Taxable, tax deferred, and tax-free or tax advantaged. So we're talking about anything in this taxable bucket. Your tax deferred bucket, you're going to have gains and losses in that tax deferred bucket and in this tax-free bucket, but you're not taxed until you take distributions out of the tax deferred bucket, and hopefully you're not taxed at all when you take distributions out of your tax advantage or tax-free bucket. But this taxable bucket, losses and gains, sometimes uncontrollable gains. We're going to talk about that a little bit. But these are all things that come out of this taxable bucket. So you should be aware of your capital gains and losses, and they can be short-term gains or they can be long-term gains. And obviously short-term capital gains are taxed as ordinary income, and that's just like you earned it. The ordinary income tax flows into that marginal, into that graduated cylinder, and it's calculated on the margin, on your marginal tax rate, and that's how that works. And long-term capital gains has preferable rates, so it can be 0, 15, or 20%, with a potential 3.8% surcharge. So you got to be aware of where you fall on those capital gains rates, because short-term gains, long-term gains are taxed differently, and losses you can use to offset those gains. So if you look at your taxable investment accounts, your brokerage accounts, and you see, geez, I've got $50,000 in gains that I took out money for whatever, and I've got these gains of $50,000. Well, are there some losses in that account that you can harvest? We're going to talk about that to offset those gains, either for this year or next year. So you should be reviewing your capital gains and losses. So other information from the sheet. So I'm going to share with you my year-end planning sheet. So if you're a client, you know this well, but really simple information. Income for the year. Any bonuses? Some people forget about those bonuses, and sometimes they're big. When they're calculating their income, they say, "Oh, geez, I didn't realize that my bonus income was going to be captured in my marginal tax bracket, and this might affect my Roth conversions, my IRMA strategies." I didn't even have IRMA on here. I did a whole video webinar on IRMA that you should watch. Other income for the year. Do you have other income? Some consulting income, rental income? Do you have an Airbnb? Do you have, is just that other income? Withdrawals from your retirement accounts. Yes, you'd be surprised how many people forget this. I once had a client who called me, and she was very upset with me. And she said, "Mark, I just looked at my IRA, and it's down. It's down significantly. It's down $30,000 in a short period of time, and I don't know why it's down. And I'm not very happy." And I said, "Well, do you remember that we, and maybe it wasn't her retirement account, but it still tracks." But I said, "Do you remember you bought a car and you wanted to take $30,000 out of your account?" And she said, "Oh my gosh, I'm so embarrassed. I completely forgot about that." And that happens, folks. I know it may seem like, who would forget about that? But people forget about things all the time, and it's normal, and it happens. So withdrawals from retirement accounts. Withdrawals from other accounts, even your taxable accounts, could create capital gains. So you've got to look at that. If you go into your online access at any custodian, Schwab, TD Ameritrade, well, they're both the same now, Schwab, TD Ameritrade, Vanguard, Fidelity, you should be able to see your gains and losses. And withdrawals from retirement accounts. And we've had people say, over and over again say they forget, "Oh, geez, I took $50,000, $10,000, $20,000 out of the retirement account." So this gives you a chance to record that. All right, I took that $50,000 out of there. And the same for the second person in your household. If you have a second person in your household, you want to review these really simple things: bonuses, withdrawals from retirement accounts, and your estimated gross total income. And then we have other tax events or changes for the year. Here's an example: sale of a home. People don't think about these things. Sale of a home. They're not always. Sometimes you get an exemption or exception for capital gains on the sale of a home. Sometimes you don't. Sometimes it's not your home. It's an investment property, or sometimes you can only take a portion of that exemption. Consulting income, as I said, tax credits. So a big one right now is EV credits. You should be taking a look. Did I do anything this year? Listen, folks, you all know I drive an EV. We just installed a charger last year. We installed another one this year at our office. I for sure, when I already did tell my accountant, hey, we put another EV charger in. I want to take the tax credit for that. Change of employment. That could be more money or less money, whatever your situation is. Go through and kind of check these things off. Any other major changes to your expenses in the past year, that's important. And estimated tax payments. What estimated tax payments have you made for the year? And do you need to decrease that or increase that coming up towards the last estimated tax payment? And we're going to talk about that. So feel free to kind of use this as a checklist. If you're a client, you received either this or you received the link for the digital version of this. But folks, if you need, and I hope I didn't cut any of this off, I was trying to stay to the right of the screen. But if you want to receive this, just send us an email. You know where to go. That's questions@attleborowealth.com. Questions@attleborowealth.com, and ask for this year-end planning form. I'm happy to share it with you. It'll help you go through it. That's what I want. So there are some of the other questions.